Now we move to our first live session of the day, and what a discussion this promises to be. I'm delighted to introduce the FT's Australia correspondent, Jamie Smith. He joins us with three chief executives from Australia's natural resources industry. The first is Elizabeth Gaines from Fortescue Metals. We also have Newcrest Mining's Sandeep Biswas, and finally, Ken Brinsden of Pilbara Minerals. They'll be discussing future trends within the industry amid increased tensions with China. They'll also cover pandemic-influenced demand and price volatility, and the opportunities and challenges generated by the green economy. And remember, you can pose your own questions to our panel using the box on the right of your screen. Jamie Smith joins you next.
Good afternoon. It's my great pleasure to welcome you all to our panel discussion on Australia's resources industry. During our session today, we will explore some of the big issues facing the sector, from commodity supercycles to political and trade tensions with China and ESG issues. I'd like to encourage the audience to ask questions at any time. They can do that via the Q&A box to the right of your screens. And of course, feel free to share your social media. And so without further ado, let's start with Elizabeth. Elizabeth, it's really an exciting time for Fortescue. The iron ore price is at record levels and the company's enjoying bumper profits. Do you think this is a commodity super cycle that we're seeing? Or is it just a mini boom that is likely to peter out when we see the end of central bank financing, for instance?
Well, look, it's I guess start with demand, and what we're seeing is incredibly strong demand. And I'll focus on iron ore. I'm sure the other panelists will focus on other commodities. But if I talk about iron ore and we look at the fundamentals of demand, what we're seeing is continued strength in the Chinese steel sector. And China does account for about 60% of global steel production. So it's a very important market. We saw an increase of 15.6% in the first quarter of this calendar year in crude steel production, up to 271 million tonnes. So we continue to see that strength in underlying demand, and last year was impacted by, obviously, COVID, but we're seeing very strong ongoing steel demand, and that is driving strong demand for our commodity, which is iron ore. So against that backdrop, we're seeing that demand is strong. The settings in China continue to support strength in steel and steel production with a commitment to continued urbanisation. That urbanisation needs investment in infrastructure, and that investment tends to be steel intensive. So all of those fundamentals support the demand outlook. And talking about other markets as well, we did see some other steel producers really impacted by COVID-19 last year. But pleasingly, we're seeing those markets like Japan and Korea now start to return to pre-COVID levels. So the fundamentals of demand remain very strong. And then if we look at supply, we have seen some constraints on supply. We saw the impact of the tailings dam collapse in Brazil 2 years ago. which really had a significant impact on supply of iron ore, with 90 million tonnes removed from supply. So, and we've been recently in a seasonally constrained period, given some of the weather that we encounter in our part of the world in operations, and also in Brazil in the first part of the calendar year. So the fundamentals of supply and demand remain supportive of the current market environment. So, and there's nothing currently to indicate that those conditions are going to change. Even if steel production in China only grew by 3% this year, that would need another supply of 50 to 60 million tonnes of iron ore. And there is no new supply coming into the market of that volume from a new supplier. Obviously, we're all trying to optimise our performance. But the fundamentals of supply and demand are very strong. Whether that's a super cycle, difficult to predict about there's talk about super cycle and how that relates to central bank easing. But I think for us and our commodity, very linked to that underlying growth, not only in China, but also that return to pre-COVID levels in other markets. So we're seeing strong demand, some constraint on supply, and that's supporting this current market conditions.
And maybe moving on to Sandeep, Newcrest is obviously principally a gold miner, and gold is maybe unique in that, as well as being a commodity, it's also a hedge against inflation. How do you see gold performing during this period of global growth?
Well, Jamie, you're right. I mean, obviously it's a commodity and it's a hedge in people's portfolios, and it's also a currency. So, if we just assume for a moment we are in a commodity super cycle, right? If you look at the last one, which is from 2001 to 2008, gold went from somewhere like $250 up to $950 when the copper price peaked. And copper is sort of used as a proxy sometimes as defining super cycles. So I think, with the amount of money that's gone into gold, the holdings and the ETFs, which are all physically backed, I think that, we're at a reasonably high gold price now, so you may not get the sort of escalation we did last time, but we'd be pretty confident that gold should perform well.
And Ken, Australia is now the world's biggest lithium producer, and lithium is a key battery mineral. It's required to power electric vehicles. The price really crashed for 2 years, but since the start of 2021, it's doubled in price. So what's going on with lithium? Is this likely to be a sustained recovery, or is this just another part of these wild gyrations that you're getting in that sector?
Yeah, thanks, Jamie. I guess the first thing to say is it feels like there's more meat on the bone this time around as it relates to the demand cycle in battery raw materials, mainly driven by it becoming a bit more global in its perspective. The first wave of demand that arose in lithium raw materials, so that period sort of 2015 through to 2018, it was principally about China and a little bit about the Tesla story. Now you've got a perspective that says, well, no, electrification, the EV thematic, and energy storage more broadly is becoming a global phenomenon. The rise of European EV sales, battery installations, leading the world in the US and even in Australia. So the phenomenon's become a bit more global, and that to us looks like it's got more momentum. Price appreciation's been welcome because it was a very, very tough period in the previous 2 years. It was really more about survival than thriving. I'm pleased to say that those circumstances have turned around now, and we're enjoying a healthy margin with an expectation that that'll likely grow in the short to medium term.
And there was just a huge amount of building in Australia in the lithium sector. I mean, it was really rapid for a number of years. That stalled for 2 years. Are we beginning to see more activity there?
Yeah, not even stalled actually, Jamie, because there was consolidation. There was a couple of mines that went broke. It was obviously a very, very tough period for the industry. So in fact, it's been consolidation on the supply side in the face of now, massive demand growth. So yeah, we would say the suppliers are probably better positioned to enjoy a healthier margin today than was the case in the last couple of years. It's a small industry, a relatively small industry coming off a small base. So I feel like you will get those gyrations in supply and demand. However, it is also rapidly growing. I think consensus would say lithium raw materials needs to grow more than 3 times over about the next 4 years. That indicates there needs to be a lot more lithium raw materials come out of the ground, and my personal view is that the industry is not ready for that sort of growth. So I suspect there will be a shortfall in the market for the foreseeable future.
And maybe, Elizabeth, going back to the iron ore sector, we've got these record prices. What's happening in terms of supply? There does seem to be quite a lot of activity in the Pilbara again. You know, Rio, yourselves, BHP are building mines. There's also talk of other mines coming on stream. Is there a lot of pressure? Are we going to see, you know, wage increases? Are we going to see costs rise again? And could you talk a little bit about your own expansion plans? Because there has been some issues with your big expansion in the Pilbara recently.
Well, I think in terms of that activity, and there is a lot of activity in the Pilbara, no doubt about it, but a lot of that is also replacing mines that are depleting. So this is about replenishment rather than adding new volume to the market. So it doesn't necessarily change the market fundamentals, but you're absolutely right. It does put pressure on resources and skills. So, you know, we're in a competitive market. We're not seeing inflation, wage inflation across the board, but there are some key skills and trades where we actually have seen some, competitive tension in terms of rates. We've had the impact here in Australia of border restrictions, interstate border restrictions, which has added some challenges around the mobility of the workforce, and that's added some wage pressure as well, with a preference to employ people who reside in Western Australia. For Fortescue, that's been less of a challenge for us because around 90% of our workforce do reside in Western Australia. We have some exposure to the East Coast. But there's no doubt there's been pressure. We've heard some others in the sector talk about shortage of truck drivers. Again, for us, that's less of an issue because we've gone down the path of automating our haulage fleet. So we are autonomous across our operations. That was a very large industrial scale conversion of our haulage fleet to autonomy. So we may not have the same pressures that others are facing, but there is no doubt that if you're a skilled excavator operator, for example, that can have that there is a very competitive market in terms of those resources and skills. So we're not seeing, inflation across the board. We're seeing, an uptick in fuel prices. The strength of the Aussie dollar is impacting, obviously, on our C1 costs because, we've seen almost a 10 cent appreciation in the average Australian dollar rate. So that does have an impact as well on costs. But we're very mindful of those cost pressures and we need to plan for those and work with our team members and stay close to those labour rates so that we can remain competitive. So we're not saying we're immune from the pressure, and probably in the project space, the contractors is where there is some pressure because some of those contractors are more reliant on an East Coast based workforce. And that's where we have seen some of those challenges, which has put pressure on labour rates, again, with the preference to employ in Western Australia. So we have to be mindful of that. In terms of our expansion plans, we have our Iron Bridge magnetite project, which is really the only major new supply of iron ore coming into the market. We're currently undertaking a detailed review of that project, but it's a project that will produce a very high-grade magnetite concentrate product, which will be incremental volume to the market and is a real growth initiative for Fortescue.
Sandeep, during the last commodity supercycle, there was a lot of development, a lot of building, and a lot of people thought the miners lost their heads. They spent too much and there was a very severe downturn. This time round, do you see any danger that the industry could overinvest?
Well, history would suggest that it's always a potential risk, but I think there have been some signs that the industry is more disciplined these times, and you can see that through the long-term price assumptions. Although they are going up, you haven't really seen any crazy assumptions. In our game, it's more about gold and copper. So I think just the amount of shareholding and the registers, the generalists come in, it's exerted a lot of discipline. Now, having said that, the gold sector needs to grow. I mean, demand is strong. New deposits are hard to find, so there will be a growth profile there. But at the moment, I don't think anyone's lost their heads. But, I'm not going to exclude that won't happen. It certainly won't happen at Newcrest because of the discipline we have, but I can't speak of the entire industry.
And certainly, Elizabeth, one of the big issues that I've covered this year in Australia is the political and the trade tensions with China. You know, we've got tariffs on a range of different Australian products. So far, iron ore has remained exempt from that. I think you'd be in a good position to answer this because you've got, 90% of your product is going into China. You've got Chinese shareholders. So, I mean, what do you think? Can iron ore stay exempt from these tariffs? And how is Fortescue looking at these tensions? And is there anything that it can do and business leaders can do to try and ease these tensions?
Well, look, there's no doubt that we can't be complacent, and we shouldn't just sit here and assume that any commodity or any product won't be impacted. But in terms of iron ore supply, I mean, Australia and the Pilbara, basically, in Western Australia, supplies over 60% of the iron ore that is imported into China. So with the Chinese steel industry, producing nearly 1.1 billion tonnes of crude steel and 60% of the raw material to support that coming from Australia, there is a reliance on the security of that supply. And in fact, during COVID, we were able to continue operating, and we demonstrated that we are a very secure and reliable supplier of iron ore with a close proximity. So the average seaborne journey is by far the shortest compared to any other supplier in the world. So, we're reliable. There were others that were impacted where there were lockdowns, South Africa, for example, where they ceased shipping iron ore. So we're a very secure and reliable supplier. We approach it from the perspective of you have to have a multifaceted relationship. So not only do we sell iron ore to our customers, and these are customers we've dealt with now for 18 years, but we also procure product. We built our large ore carriers at shipyards in China. We procure a lot of product from China. As you referenced, our second largest shareholder is a Chinese SOE steel mill. 2 of our directors are Chinese. So we stay very close to our customers. We approach this in a multifaceted way, and we have very strong engagement. So we certainly aren't complacent about the importance of that relationship. But more importantly for Australia, I mean, the fact that Australia is in such good shape, given the last 12 months and dealing with COVID, is due to the resources sector. While other industries have been terribly impacted by COVID, the resources sector has continued to operate, and in fact the contribution to the economy, and the fact that West Australia has been, I think, has the best performing budget of any state or government in the world is due to the strength of the resources sector. So we certainly can't be complacent about the importance of that trade relationship. And as a business, the way that we approach that is we stay close to our customers, and we're very engaged with China, and we remind our politicians of the importance of that trade relationship. I mean, I think they must understand it because of that strength of the economy. And there's often reference to the fact that Australia is coming out of this in pretty good shape due to a number of factors, including the strength of the iron ore price. Well, we only get to benefit from the strength of the iron ore price because we actually participate and we're selling products to China. So, we consistently advocate for that. We advocate for diplomacy in relations and that recognition of that strong trade relationship. So, but we're staying very close to our customers and very focused on being that secure and reliable supplier of iron ore to them.
Ken, Australia has vast resources of lithium. So does Latin America. So you wouldn't think that the country would be exposed to security of supply issues. But when you look at who's processing lithium and also the battery minerals sector, China is really quite dominant there. Is there a case for Australia to do more of the processing, the higher value type of activity? And is that important now when we seem to have a sort of decoupling between the West and China in the political and trade sphere?
It's a really good question, Jamie, and absolutely something that you need to maintain a focus on. There's no doubt about it. China has become an incredibly important processor of battery raw materials. That's particularly true in lithium raw materials. With that as a backdrop, I just completely concur with Elizabeth's comments. You just need to be really careful about the relationship with China. And in many respects, we're closer to China than the rest of Australia, but none the least of which the major population base is on the eastern seaboard. So it's in our interest to maintain our market, maintain rational, reliable, quality supply base that I'm sure the Chinese chemical converters see as being an important subset of their supply base. So absolutely rational, stay close, stay reliable, stay as a quality supplier, and there's a reasonable chance that that's going to be, a mainstay for West Australian lithium production. I think if you drill down just one more layer of detail, it is also the case that the hard rock supply base that's based here in Western Australia, as you say, world's largest supply base, is of a particular quality and volume of supply that means it is a fundamental mainstay in the market, and China knows that full well. Having said that, it's also an industry imperative that there is further localization of supply chains that emerges over time, and that's in everyone's interest, because now you've got the rise of Europe as a key chemical base, and we would suggest over time US markets as well, in which case it seems inevitable to me that there will be further diversification of the supply chains beyond China. In fact, China is in themselves a key driver of that outcome. Our largest, or one of our largest shareholders, CATL, China's largest lithium-ion battery manufacturer, is already building battery facilities in Europe with an expectation that there'll be localization in the supply chain. So yeah, that's all getting a lot more prevalent. A level of maturity is emerging, and I think there's big changes in store for the lithium-ion supply chain over the next decade.
And Sandeep, any discussion about mining really has to look at environmental, social governance. And this year, we've seen the destruction of the Juukan Gorge cave structures in the Pilbara in Australia, huge issue which ended up with the boss of Rio Tinto standing down from the company. So this has really resonated across the whole Australian mining sector. How does Newcrest look at that issue? I mean, did it change your thinking at all in how you interact with Indigenous groups and Indigenous heritage? Because I know you have mines here in Australia, you have mines in Canada and in PNG. So those are three countries with large Indigenous populations. Did it change your thinking at all? And how are you ensuring that those types of issues don't cause difficulties for local communities and yourself?
Very good question. So yeah, I like to think that we've always had a very good relationship with our communities. Spent a lot of time on Lihir Island rebuilding those relationships. When I first started Newcrest, they were not in the best of shape, but we've recently re-established the governance of the funds there, a new compensation agreement, and a much closer relationship, which was made stronger by COVID. In fact, all our relationships across our businesses were closer as we went and worked with the community, keep them safe and keep our businesses running. Now, and that includes the Red Cliffs as well, with the Tahltan Nation in British Columbia. We did a lot of work there to build a stronger, even stronger relationship. But if you're asking specifically about the impact from the Juukan Gorges, I mean, there's no question that the whole issue has been elevated to unprecedented levels. Now, we undertook an audit of all our governance processes around, heritage protection and what have you, and we've instituted some changes because we thought there are areas that we can strengthen our work. For example, wherever we go, we have the local representatives on site as we're digging, because, you do heritage clearance, but if you come across something that you didn't find or they didn't find the first time around, that they're right at the shovel effectively, so we can stop work and work out how to deal with that. So that is a change. So that 24-hour monitoring, we've put more resources on the ground right at the coalface, as opposed to necessarily in corporate to help address these issues. So I think And then the broader ESG agenda, and not just in the area of social performance, has really built up a huge momentum, which I'm sure we'll get to talk about. But it's real, it's needed, and I think there's a lot of lessons learned for the industry, not just necessarily the particular companies involved in whatever's transpired.
Elizabeth, the Pilbara is really on the front line when it comes to the reaction to the Juukan Gorge. There is new legislation which is under discussion in Western Australia, and some miners have suggested that this could cause delays to expansions. Can you talk a bit about your views on whether there could well be delays to the $10 billion plus worth of expansions that are going on in the Pilbara? And are you happy with the way the draft legislation seems to be going?
Well, look, I think in the context of that draft legislation, there was a draft circulated last year. A lot of industries commented on that draft. It's not specific to the mining sector. It impacts agribusiness, tourism, even public government spend, because they still have to go through the same process to disturb land. So this has wide-ranging implications. We've just had a state election. We have a new minister, and there hasn't actually been any subsequent movement in terms of discussions or movement on that draft legislation. So I do think it is still some way off. It might be later this calendar year, but there is quite a lot of work and consultation to go through. The key things that will be important is, what do those transition arrangements look like? We actually support the modernisation of the Heritage Act. We think it's time that it was modernised, that there was equal rights of appeal for all parties and a greater voice for Aboriginal people. So we're very supportive of the concept. But obviously with any new legislation, you need to understand for all parties how it's actually going to operate and what are the transitional arrangements. And we don't have clarity on that yet as an industry, and it's an important piece of work. In terms of planning for major developments, I don't think it's just the legislation that we need to think about. We actually need to think about the native title groups. Obviously, Juukan Gorge has elevated this issue, not only for us as a sector, but also for the groups themselves and the work that they do on heritage surveys. There's actually, these are quite small corporations. They're actually relatively small. They don't necessarily have a lot of people who can undertake the surveys, who have the knowledge of the land. So this is actually not about necessary delays to projects, but I think what it has done is elevated the view that you have to plan for a longer approvals process. Don't assume that you can mine something in the next 2 years. You actually have to plan for a longer period, because to undertake the surveys, to respect the sensitivity that's been created by Juukan Gorge and the fact that native title groups may take a slightly different approach to this process, it's actually less about the legislation. It's more about that engagement with the native title groups. We approach it from the perspective of always looking to protect areas of significant cultural heritage, working with our native title partners across not only protecting heritage, but also providing jobs, training, business development opportunities. So it's a sort of an all-encompassing proposition. But we need to work closely with them, regardless of the legislation, and actually plan and make sure that we are well and truly planning for the long term. And for some of us, that may impact some of our short-term plans, if nothing other than the fact that at the moment, some of those groups, and one group in particular, is still very focused on the reparation for Juukan Gorge, and that's where their key focus is. And so we have to work with them as they go through that process. So it's about planning, working closely with them, and taking, a very, making the assumption it will take longer, and therefore planning for mine plans accordingly.
And Ken, have you noticed your own investor base taking much more interest in these heritage issues and other ESG issues? And how much engagement are they involved in with your own company?
Oh, absolutely, Jamie. Without doubt, ESG issues as a whole have become a much more important part of the engagement with our investor base. Whether it be incidents highlighting Indigenous relations, the effect of tailings management, reflecting on issues in the South Americas, carbon footprint, you name it, they're all key issues. But I guess at its heart, we welcome those conversations, because ultimately we want, well, our company, but arguably the industry more broadly, to be mature, deliberate, and constructive as we think about all the impacts that our industry might well have, whether it be on the local communities, or when we start to think about the global community, you know, climate change being a key example. So yes, it's true that the level of intensity and discussion about ESG issues has grown, but arguably we should be up for it. We should welcome it. We should be constructive in our response, because ultimately that's what people expect of us as good corporate citizens. So I say bring it on.
Ken, is there any chance it could dent the competitiveness of the Pilbara region, you know, one of the most competitive mining regions in the world?
Well, I don't want to paint too fine a point, but would say no. In fact, quite the opposite. I'm an advocate of it being a key value add to our industry in the Pilbara, and that's because if ever there was one of the world's great renewable resources, it exists in the Pilbara. You know, whether it's the combination of solar, wind, future investment in hydrogen initiatives, energy storage, exports, you know, ammonia, for example, you know, basically exporting hydrogen. I think they're all amazing opportunities, of which the Pilbara is going to become one of the world's great hubs. And as such, we should lever that into value adds in our industry that ultimately do both lower our cost base, but equally establish supply chains that have a lower carbon footprint. I think that represents our opportunity and our value add.
And Elizabeth, I think any discussion of ESG has to look at climate change, and this would involve miners' efforts to reduce their own emissions and also develop new technologies and energy sources to address climate change. Now, Fortescue has announced a very ambitious and interesting plan to diversify from being an iron ore miner to being a producer of green energy. Can you outline how you're planning to do that?
Well, Jamie, there's two aspects to it. And I think, you know, Ken's hit the nail on the head in terms of his description of the Pilbara. So we do have an ambitious plan to decarbonise our iron ore operations. So to do that, we actually need that energy supply. And we're looking at the future of mining fleet. We're looking at the future, what locomotives are going to look like, what energy they'll utilise, and, you know, that one candidate being green ammonia, and shipping. So, you know, across scope 1 and 2 and scope 3 emissions, because shipping obviously been a big contributor to scope 3 emissions. So to actually decarbonise our iron ore operations, which is a key objective of ours, and to do it by 2030, we need that supply of that green energy. And, you know, the Pilbara is well placed. So that's one aspect of, so we are a natural customer of that supply of green energy. But then we have actually established Fortescue Future Industries, which is also looking at that future potential to develop what will be a new and very significant export market for Australia. So countries like Japan have just announced that an increase in their target to reduce emissions from 26% by 2030 to 47% by 2030. And that's, you know, this is accelerating. The US has doubled its commitment to reduce emissions by 50% by 2030. So in the last 2 or 3 weeks, we've sort of seen that this rapid transition is going to occur. So there will be demand for green energy. Australia is incredibly well placed to supply that green energy. We're going to be at the forefront of that because, you know, that's what we do. We're an exporter. We manage large infrastructure. We work with our customers. We develop markets. And so we want to be part of that energy transition and that rapid take-up of the demand for green energy, which is a significant export opportunity, will benefit Australia, will benefit Western Australia, will benefit Australians in terms of new skills and jobs as well. So we're tackling it from both angles. One is decarbonise our operations, which is an important initiative, and having a emissions-free iron ore product we think will be attractive given that our customers are also on their own journey to reduce emissions. And on the flip side, we're looking at that supply, and not only for our own operations, which is large scale and industrial, but also, you know, for others in the Pilbara in our sector who might also have demand for that green energy, but as a significant global export opportunity. And we're not just looking in Australia or in Western Australia, we're looking and other parts of Australia and globally, because we know that this demand will come, and we think the transition to clean energy will be far more rapid than, in the past. Everyone sort of talked about the middle of the century. Well, by then it's going to be too late, because to align with the Paris Agreement, this needs to happen far more rapidly.
And Sandeep, in recent speeches, you've talked a lot about how you think copper is going to be an even more important part of your own portfolio at Newcrest. And of course, copper is key to the green energy revolution that we're seeing. How are you going to do that? Is it going to be by exploration, finding more copper? Is it going to be by changing what you're doing in your mines? Or are you going to acquire some stuff?
Well, we're fortunate to, in the last few acquisitions that we've done, it's brought into a lot of copper. So our Red Chris mine has got a lot of copper, which we're now in the business of going underground. The Havieron discovery in the Pilbara has got a good copper component, plenty coming from there. And if we get the Wafi-Golpu project up in PNG, I guess that's the world's best undeveloped or higher grade underground copper deposit in terms of its development potential. So we've got a lot in the portfolio, and that satisfies our desire to be part of the solution longer term. But we've got our own challenges to decarbonise our operations as well. Now, the gold industry typically doesn't have a lot of Scope 3 emissions, so we can double down on Scope 1 and 2. And an example, at Cadia, New South Wales, we just did a contract with a wind farm, which will see us from 2024 onwards having reduced the entire footprint of Newcrest by over 20%, just through that one action alone. And obviously there's more that can be done there. So our initial target was a 30% reduction in intensity by 2030. But if we keep going at this pace, obviously we're going to have to revisit that. And we're also doing a piece of work to show how we might be able to decarbonise completely, because we have quite a spread. I mean, Cadia is fired with the grid. At the moment, Lihir is off oil and geothermal power, so there's a mix there. Telfer's on gas in the Pilbara with a lot of potential to potentially get a solar farm in place and have that firming power from gas and have the solar power. And Red Chris and in Ecuador, Fruta del Norte, that's hydropower. So depending which business it is, incoming power is important. And then there's the switching all your on-field equipment over to electric. So in the end, you could not only remove carbon emissions on site, but in the case of underground particularly, remove diesel particulate emissions, which is a real health risk which the industry is seeking to eliminate. So there's a whole bunch of spin-offs from going down that pathway. And I think the power is going to be cheaper the more we go down that pathway, right? I don't think it's a question of cost.
Right, yeah. And I think at this stage, I'd like to take a question from the audience, and it's directed towards you, Ken. It's, Ken, you spoke of the possibility that there may be a shortfall in lithium production in the future. Is lithium recyclable? And if so, could that address any possible shortfalls?
Yes, it's absolutely true. The lithium or the battery raw materials from lithium-ion batteries are recyclable. The challenge for the industry is that in this relatively early phase of growth, there is insufficient batteries for the purpose of recycling to really make them material in the supply base. However, it is the case over time that the mass of batteries being constructed, for example, over the next decade, implies that in about 10 years' time, there'll be a material contribution of recycled material. But in this first phase of significant growth, we're essentially, as an industry, we're relying on primary sources of supply. So not a function of short-term supply, but highly likely to be a function of longer-term supply.
And Elizabeth, maybe I'll go to you for this one. How do you see the industry addressing the carbon footprint of iron, lithium, and other natural resources?
Well, look, I think we've got our objective to be carbon neutral by 2030. So from an iron ore perspective, we've got a pathway to achieve that. That requires commitment It requires research and adoption of technology. We've always been an early adopter of innovation and technology. So our autonomous haulage fleet's a good example of that, where we went very large scale. So that's the technology's emerging. It's not as though battery technology doesn't exist or that hydrogen technology doesn't exist. It does. It needs, there is a lot of work going into what does the mining fleet of the future look like. In terms of stationary energy, Sandeep was describing the energy sources he has around the world. Similarly, in the Pilbara, we have the same opportunity for our stationary energy requirements to actually rely on renewables. So we've just we've got a 60 megawatt solar farm at the Chichesters. We're putting in another 150 megawatts in the Pilbara for the balance of our operations, and we're transitioning to gas, so we won't have any diesel required for our stationary energy. And then it's the mobile fleet, and how do we deal with the mobile fleet? So the solutions are there. There is a question of, are you an early adopter? Are you a fast follower? There's choices to be made by the different companies in the sector. But I think doing nothing, if there's a company out there doing nothing, then that's a real risk, because this is also mitigating risk, because we currently have a diesel fuel rebate here in Australia. We don't have a carbon charge at this point in time, but doing nothing means that actually you could be left very short-footed in terms of really not going down that path of adoption. So I think a combination of committing to a target, working on it with that commitment and implementing it, and then there will be other pressures, external pressures, whether that's from an ESG perspective and the demands from various stakeholders to achieve carbon neutrality, or from changes in policy settings, which could be removal of incentives or levies and the introduction of new taxes. So it's an important area for the sector to get across. But I think there's great opportunity for commodities more broadly to go down that path of decarbonisation, because there are solutions for the mobile fleet, for the haul trucks, for the drill rigs, for water car. I mean, there's all sorts of opportunities, but the sector needs to really focus on that, because the pressure is not pressure. I think the demands will be coming, and I think it's also a good opportunity.
Yeah, Jamie, just another quick comment to add there. A lot of the political speak focuses on this sort of open question about whether we're making pie in the sky claims. I think the big piece that's missing in the discussion and the debate is the speed with which the technology is both being introduced, but perhaps even more important than that, the speed with which the cost of the technology is coming down. There's a useful path that's been followed in respect of solar supply, approximately 20% cost reductions per annum as the industry's scaled up. Batteries are heading down a very, very similar path. It should not be underestimated how quickly this technology will evolve, be competitive in cost, and ultimately, therefore, the speed with which it's rolled out. I think, unfortunately, that's one of the aspects that perhaps our politicians miss, or they're not as close to the industry as you might like them to be. And that represents the opportunity, as aptly described by Elizabeth.
Sandeep, can I ask you about keeping the mines open during COVID? I visited your Lithium mine in PNG. It's a very remote place. I think there's quite a lot of fly-in, fly-out workers. How do you manage to keep it open? Have you managed to keep it open? Because there's quite a serious outbreak of COVID in PNG.
So we've managed to keep all our mines open, but let's focus in on here. So it was a transition. So if you go back a year when it initially arrived, COVID, we managed to lock down the whole island. So Lahir is on an island in the remote northeast of Papua New Guinea in the New Island province. So we took, with the community and the local government on the island, actually locked the entire island down. No one was getting on, no one was getting off. You couldn't even get a banana boat on or off the island. And that was a huge sacrifice for our people, because essentially, some people were committed to be there for 3 to 6 months until we could get the movement of people flying again, as we understood what the various restrictions were within PNG, within province, and also between Australia and Papua New Guinea, where we do fly in, fly out mainly technical people. So, and now when we actually have seen the scale of COVID in PNG, we're still managing it. COVID is all across PNG, but Lahir is open. We've got all sorts of protocols around the 2-week isolation in, on the way out, and numerous testing that goes on every day. People tested numerous times. I mean, it's a very comprehensive regime, but, you know, our people's safety comes first, and that's always our mantra. But at the moment, Lihir continues to run, and we're completing our shutdowns and all the necessary work. But just want to underscore the support of our people. Without that in the community, it would have been a very different story, not just at Lihir, but elsewhere in the world.
And Elizabeth, we've only got a brief moment left, but maybe just to follow up on that, the Pilbara managed to stay open, you know, and it really did benefit the Australian economy hugely by keeping the flow of iron ore going to China. How did you manage to keep COVID out of there and out of the fragile, vulnerable Indigenous communities?
Well, look, I think what was a really good outcome is that the sector banded together, and we worked with the government as well. So this started with the Premier, who called us to, you know, very early on for a high-level meeting to understand the issues and the challenges. It was the government's decision to close, you know, Indigenous communities to any outsiders, and we supported that decision. In terms of the measures that we put in place, again, the industry worked together very well on that. I mean, each company had some of their own measures, but we had some sort of overarching principles, and safety is our number one priority. So the health and safety of our people and the communities in which we operate is our core priority. But, you know, it would have only taken one resource company to do something different and to maybe have an outbreak, and we might have had a different outcome in terms of lockdowns required across the sector. So it really was a sector response. But I mean, again, like Sandeep, I mean, this, you know, the work we did with our people, communicating to them, we had to extend rosters for a period of time last year, really actually in this June quarter, to ensure that we sort of slowed down the movement of people. So rather than 2 weeks on, 1 week off, we went to 4 weeks on, 2 weeks off. That was a big ask of our team members, but I think people really rallied behind it to make sure we could continue to operate. And all the other measures that we've put in place, whether that's temperature screening, hygiene management and various other measures, they obviously still remain in place. And, you know, in West Australia or in Perth region, we had a lockdown only a week ago. So we're still dealing with this, but as a sector, we're really working well together. And to date, we've had no cases of COVID across any of our operations. So it's been a team effort from the Fortescue team through to the industry working together and working closely with government.
Thank you. Okay, that's great. That's all we have time for. A huge thank you to all my panelists and the audience, and I'll hand you back to Ravi.